Hi all, this is Rachel from Mortgage Helper. Today is the 25th of March 2020. So we know that Australia is going to have the second stage of lockdown. This video we're going to cover the changes since the lockdown of mortgage application and property market. So we'll start from mortgage first. With mortgage, I've got a few applications we submitted a while before the lockdown happened. And yesterday, I received a few phone calls from lenders. Before they approve the application, they actually call and ask for a few things. They have to make sure the client's industry or their job or their business, it doesn't have impact because of the lockdown or of the virus. The second thing, they are actually asking more details of their job or their business, they're going to make sure the client still be able to pay for the mortgage. Because of all this, I assume the application, that whatever application we submit into the lender now, they have to look into your job details very, very detailed and careful. They are not going to approve anything they are not sure about. Let's say you own a business, which is a restaurant. That obviously is going to be tough to get it approved. There's a lot of things. You're going to make it strong, got to make the background very strong and explain to the lender about your financial situation before you submit the application in. All right, the second thing, I actually received some inquiry, which is a lot more than before, about refinance cash out and interest only. So we'll start from refinance cash out. Refinance cash out, it means, let's say I've got a property worth 1 million and it's fully paid off, or the loan amount is very small. And I know there's some equity in between, I can pull it out for further investment, So this is what we call refinance cash out. For all these sort of application, before the existing policy is, as long as it's less than 250,000 Australian dollars, a lot of lenders, they don't need much evidence. They will just approve it and the money will be in your bank account. But what happened is, because of the virus, the lender, they're going to worry about, is this client short of fund? And that's the reason they want to cash out for the business or for their daily living or expenses, Because of this reason, all the refinance cash out, it also has to be very, very strong. Otherwise, the lender, they're not going to approve it. Let's say you pull the equity out, you're going to purchase another property. You're going to buy something cheap, or a stock market, or a renovation, whatever. It has to be a very strong application. Let's say I want to buy a property. I draw 1 million out or 800,000. You got to make sure you have the extra funds ready for the upfront payment, for the other 20%, legal fees, stamp duty, and everything. All these, you got to make sure you speak to your broker or banker about the full scenario, about your background, the reason that you pull the money out. Otherwise, the lender, they're not going to be so easy to approve any cash out application. The second one is about interest only. So there's some client, they think they're looking at refinance, but from principal plus interest, they want to refinance into interest only. Of course, you can do it, but with interest only, always be aware of the repayment in the future. Because let's say a loan is 30 years. The first 5 years, you do it as interest only. And from the 6 years onward, you start to pay the principal. So that means the principal, instead of 30 years, you only have 25 years to pay for it. It also means the repayment, you jump up a lot, And because of this reason, you're going to make sure your financial situation will remain the same or stronger. Otherwise, you have another problem in the future once the interest-only term is finished. So with refinance, now a lot of lenders, they actually giving cash back, and it's pretty good amount also, up to $4,000. If you consider refinance, you can always contact me, 0420-828-828, and we can see whether there's any good option for you, whether it's a strong case or not. For myself, I don't take any application which is I'm not confident with. From last financial year up to today, my approval rate remains at 100%. I don't miss any application. So sometimes my response might not be as quick because I got to make sure whatever case I have on hand, they are all, I deal with all these. I make sure these all settle or approved before I take any new application. Sometimes, like new clients, new inquiry, I answer, explain to you, and once you send me all the document, you might have to give me 1 to 2 business days before I look into yours one. But once I pick up yours one, it will be pretty fast. It will just be a couple of hours only. All right. So also I've got other clients, they were asking, is it worth to cancel or to break the fixed term and leave it as variable because they think the interest rate is going to drop further? This one I can't comment on it. Be very honest. In the past few years, variable and fixed term 2 years, most of the lender 2 years, they're always the cheapest interest rate. So a lot of people fix it. Even myself, I fixed one of my loan end of 2017. I still sitting on a low 4% because I purchased under trust. It's a different way of doing it. But look, when you're buying a property, refinance, the most important thing is you got to calculate your repayment. Are you going to be able to pay for the repayment? There's no way you can always chase for the cheapest rate. If you're looking at the cheapest rate on market now, it will always be a fix. So if you fix it, how if it drop further? You're going to upset yourself. So as what I always said, fixed or variable, as long as you understand what it is, even if it drop further, leave it. Wait till the fixed term finish, and then you can consider whether you want to leave it as variable or fixed again. All right. So if it's worth for you to break the fixed term, to leave it as variable or refinance, that you got to calculate. You got to ring up the bank to find out how much is the break cost and all the discharge fee and everything. And you look at if refinance, how much you'll be saving and how much cash you're going to get from the refinance cashback, So after you calculate all this and then make your decision. So with property market, I actually spoke to a few different agents. There's resale property agent, external agent, and developers agent. So pretty much their feedback is quite similar. They've been receiving a lot more inquiries than normal, means before the lockdown happened. But what happened is they can tell the clients that they've been contacting, they are not going to make any decision yet. So from this, we can see there's a lot of potential buyer out there. They are waiting for the right time to step into the market. So honestly, if the market will have a bad impact or a dramatic drop or anything like that, it really depends on how long the virus is going to be, how long the lockdown is going to be. All this is just my personal opinion. Myself also, I've been looking into different suburbs in Sydney, pretty good area. What I find is a lot of listing disappeared. We can see a lot of sellers, let's say myself, if I'm not desperate to sell it, I'm not desperate to get the money back, I'm not going to put it on the market at this stage. I'll wait a bit further, wait till everything's more clear. Therefore, you can see a lot of listing is gone, it's no longer there. At the same time, even some clients, they experience, or property owners, they experience difficulty on their mortgage repayment. The bank, a lot of them, they over up to 6 months. You do not need to pay for the mortgage for up to 6 months. So that means as long as you're saving, your cash flow is enough for a couple of months, normal expenses, exclude mortgage, it's going to be fine for a while. So everybody knows if you put it on the market now, you might not get the price that you want. A lot of people will try to get a good price for it, a good bargain for it. So that's why we can see a lot of listing is gone. So at this stage, people who put it on the market, I would say there's two different types of sellers. The first one, really honestly, they are having some difficulty on their mortgage repayment. The second type is maybe they're going to sell it and get the money, and get ready for the next one, you know, the next property. So really, if the virus is going to last more than 4 months, 6 months, we will start to see some bad impact happen in the property market. Again, this is just my personal opinion, and I back it up with some points. So first of all, even if people have difficulty on their mortgage repayment, they are allowed to, you know, stop the repayment for 6 months. A lot of business, they out of cash flow, you know, we will see people start to have, I mean, make it more clear. We will see the unemployment rate is getting higher, you know. From that, then we'll see a bad impact on property market, but it won't happen so quick yet. I would say 4 months, 6 months later, it depends, you know, if we are lucky, if the virus is clear within this couple of months, it shouldn't affect the property market so bad. Okay, so if you have any issue with your refinance or any other question, you can always contact me at 0420-828-828. 0420-828-828. My name is Rachel. I'll see you in the next video. Bye-bye.